All right, and then, however, we also have those beginning items that we have to set up, the foundational things that need to be put in place. Once put in place, it's kind of like having a good governmental system or infrastructure in place. We can then build on top of it, and we kind of forget about the fact that that infrastructure has already been laid down, the foundation is already underground, and everything is good. But when that foundation crumbles, when you get some like an idiot in the White House or something like that, you're like, oh my goodness, we need to fix something here. This is ridiculous. Like, this guy's demented, or something. And then you got to fix everything, right? So you have to do that when you start the new company file, and then you might have to do it from time to time as we keep up the company file. And most of that stuff is in the cog button up top. So in the cog button, we're now looking at these lists. Last time we went over the lists in general, remembering that the term lists might not be in accounting textbooks because it's more of a software term that kind of developed from that drop-down window. So if we go into the lists, the two most common lists are going to be, or the ones that are most important, will be the chart of accounts and the products and services. So the big ones are the chart of accounts and the products and services. We're now looking at the products and services. It's likely that you're probably not going to go into the cog as much. I would think that most people, when they're trying to get into this particular list, are going to go into the other way to get there, which is over here in the sales tab. And then within the sales tabs, we have the products and services. Now, this particular location makes sense kind of, but doesn't make sense perfectly. So you could imagine QuickBooks moving this around. I think they have kind of moved this tab around in the past. If they do, you're just going to have to hunt it down, meaning when we're on a web-based system, QuickBooks might change things from time to time in terms of the look and feel, but normally they're just changing the outer packaging. The stuff inside is the same, basically, right? And so you just got to find where they set the outer packaging. The other place that it might make sense would be to put it like in the transactions tab, maybe, because it doesn't fit directly in any other area. And that's also where they put the chart of accounts. So that would kind of make sense. But they have it in the sales tab, which kind of makes sense because the products and services are the things that we sell. However, if we sell inventory, we also buy inventory, and therefore the products and services are going to cross over the two kind of cycles that we think about. If I hit the cycles, both the customer cycle and the vendor cycle. It's in the vendor cycle if we buy inventory when we purchase it. It's in the customer cycle when we sell the inventory, when we sell it. So that's just a quick overview on that. Let's close up the ham boogie. And so here's going to be our items down below. So just note the criticalness of setting up the items will be dependent on the type of industry that we are in. So let's take a quick look at the flowchart to get an idea of how these items are going to fit into the cycle and then how we would think about setting up the items. Remembering that this is an area that a lot of people aren't as good at because a lot of people that do the bookkeeping process aren't on the setup side of things. They just started working after the system had already been set up, and or they might be working in different industries. So note that setting up the items for a particular industry will be a point of specialty and something you want to think about as a bookkeeper and say, okay, what kind of industry do I want to deal with? And some of the items set up might be a specialty item that you can have special skills on. If you're in a particular industry and you're hiring a bookkeeper or working with a CPA firm, you also want to think about that same idea. What kind of specializations are in my industry that are not in other industries? And does this person that I'm working with, tax preparer, CPA firm, bookkeeper, know how to deal with those issues? All right, let's go back on over to the flowchart here. This is the desktop flowchart, but we're using it for QuickBooks Online because we're just looking at the flow of the forms, which is basically the same for any kind of accounting process. So when we're thinking about the items, we're mainly over here on the customer side, but remember, if they're inventory, we also have the vendor things that we'll have to deal with. So let's just think about the customer cycle from easiest to hardest and how the inventory items are going to fit into that. So the easiest cycle, as we recall, would be one which we just do gig work. We get paid by a platform like Google. We're just a YouTuber or something, not like just a YouTuber. I'm not trying to put, I'm on, but I mean, we just get paid from the platform. It's pretty easy from a bookkeeping standpoint if that's the case, because we can basically wait till the money clears the bank and just use the bank feeds to record the revenue, which means we're going to be recording revenue with the deposit form. Not exactly how the system is typically designed to record revenue, because normally the sales receipt and invoices are designed to record revenue, but we're going to sacrifice some of the added details in order to make it easy. In that case, it's probably worthwhile in that case. So if that's what's happening, we're probably not having to deal so much with the items. They're not going to be as important, because we're going to define the types of revenue categories that we are receiving, not by really the items that we sell, but by the platforms that we're on, right? We're just going to say, okay, I got paid by YouTube, so I'm probably going to set up an account and just call it YouTube revenue. Right. And I'm probably, if I get paid by some other platform, I'm just going to name the platform and say I got paid by this revenue, or Google revenue, or AdSense revenue. And notice that that's not normally what you want to do, because normally we don't list out our income items by who paid us, in essence, kind of by customer. We normally list out the items more by item. So in other words, if I go back on over here and I go to my income tab, notice that we have a lot of income line items in this particular business, but many businesses don't have that many income items because they're not job cost types of systems. And so normally we don't make an income line for every customer that we have. That would be very tedious. It would result in a lot of income line items. So what we want, so we don't normally do that. Instead, we make it by group or main category of items. We sell inventory or services are the two most general categories of accounts. And then normally we could go to the subledger and get more information in QuickBooks, which is great, breaking out the income by who we sold it to if we have that information within the system. But if you're doing gig work, it would be easier to just say, okay, I'm just going to put it in there by, in essence, customer, because it's just a large platform that I'm just going to call it AdSense revenue, or, YouTube revenue, and so that's kind of the exception to the rule. Also, there's a temptation to put the income line items on the income statement by everything that we sell, every particular service, every particular item. Again, we don't typically want to do that. We want to summarize the items on the income statement. And if we have a full service accounting system, we should be able to make subledger income reports breaking out by item as well. Okay, so that's the easiest method, where the items, you might not even be using these forms, so you wouldn't use the items as much. What if you're at a cash register type of situation? You sell stuff during the day, or at a particular location. You get paid at the same point in time you sell things. That's when you use the sales receipt form. Now, you can imagine a situation where you sell something quite basic, like you sell one item or something like that, and you just sell sandwiches or something, right? And they're all the same. Well, in that case, you might say, okay, I'm not even going to use the sales receipt form or a cash register. What I'm going to do is just make the sales during the day, use like a periodic inventory system, counting the units that I have, and then I'm just going to deposit at the end of the day and just call it revenue. I'm just going to call the deposit revenue, which again, that would mean that you're just going to use a deposit form and you're not going to record any more detail on the items. However, if you have any kind of variation in the item, it would be better. We could level up the internal controls if we record the items that we're selling at that particular location. And for that, we would normally use the sales receipt form. So in order to populate the sales receipt form, we need to set up the items. And this is where I would have in your mind the imagination that you have like some stupid teenager, right? I'm not saying anyone's like a stupid, but they're all stupid, because we're all stupid when we're teenagers, right? So they're all distracted, we're all messed up, and we're like, so you want some distracted teenager to be able to do the data input into the cash register, collect the cash, even though they're all distracted and they're a stupid teenager, right? So in order to do that, you need the items to be set up properly. So if you're in a store, for example, and someone brings something up to the front of the store, you can imagine they scan it. That would be an easy thing, or at least they can locate the tag on it and put in the proper tag to put it into the system. And then the system's going to record everything, as we have seen in the past when we see the sales item, the sales receipt, what's recorded. It's going to record revenue to the proper account. It's going to record the income that is revenue to the proper account, and the cash that we are receiving. It's going to put it into undeposited funds typically, because the cash or payment that we received isn't going directly into the checking account unless they gave us an electronic transfer at location, and then we'll have to transfer that to the deposit form. So that means if you're in a location and using QuickBooks to record sales as they happen at like a register, the items become very important. They're the underlying foundational thing that you have to set up well. You have to have knowledge to set that up so that you can hire someone that doesn't have knowledge, like a stupid teenager. They're all stupid. That can just do the data input, even though a complex transaction is being recorded, even though they don't know what's going on, right? So that's where you need the items here. And of course, if you're in an accrual type of system, that means you do the work first, and then you create the invoice, and then you have to collect on the invoice and record the deposit. Once again, this kind of system is what's normally there for law firms, CPA firms, landscaping, and you're going to need the items here as well. In a similar way as you would with the sales receipt, you can imagine if you sell inventory, that's going to be important. But here, there's another kind of problem that comes into play, and that is that people tend to always want to just charge hourly for their services. And sometimes that's the best way to go. You just charge hourly, which makes your items very easy. You're just going to charge by hourly item. But it's often not the most transparent way to do the business, right? Because people, it could take you a lot longer one day than another day just because you're tired to do a particular job, and you might have staff working on a job and it takes them a different time frame to do different things. So a lot of people would recommend these days, even with those service items, to try to come up with items so that you can be more specific and transparent with your clients about what you are providing. So you might, for example, if you're a bookkeeper or a legal firm, try to have a subscription model where they pay you for a subscription, and in a way it's kind of like insurance. If you're a law firm, right, you're there for them in the event that they have more work, or some months they're going to have more work than less months, but they know what the payment is going to be or something like that. That's one method you can use for bookkeeping. Instead of doing hourly, you might try to run a transaction detail report and try to count the transactions or the accounts that you're doing data input for, and then give a billing range for the number of transactions that you do within whatever your time frame is. So you can tell someone, I charge so much for this many transactions. I can show you how many transactions it took, and so I can give some evidence of the actual work I did, rather than just kind of this hourly thing, which is kind of ambiguous, or it's not really verifiable, right? So you can kind of give them that information. Similarly, if you have the estimate, you're going to need the items in order to create an estimate. If there's a long project, like a job cost kind of system, then you're going to have to put the estimate together with the items. The items become very, very important in that case, to try to estimate as best you can for a long-term construction job or something like that, because that's the thing that's allowing you to see what's going to be the cost and what's the profit margin of the job. So that's the general idea with the items. So what do we need in order for the items